Good morning, ladies and gentlemen. Welcome to the show. Today is October 31st, 2019. I wasn't able to do the show yesterday. I had to go to the dentist, and I had Novocaine in my mouth all afternoon. We all know what that's like. Anyway, let's get started, and let's open up the charts right here and take a look at what's going on. Now, the first thing I want to show you is China is putting credit into the markets. And this chart goes back to the 2008 crisis. Now, you see, there's four big humps here of credit that the Chinese, or mountains of credit that the Chinese injected into their economy. And if you look at this first one, it's probably the one that's most important to look at. Look at the size of it, the size of the amount of stimulus that they put into their economy just after the 2008 crisis in the United States. And this giant mountain, enormous mountain of yuan, which is a Chinese currency, actually reflected on the whole world's economy. It's what built the ghost cities in China. These cities that are massive cities that they built in the middle of nowhere that are empty, a lot of them are still empty. So that was the first one. You notice the second one was a big mountain of credit, too, that they took out in around 2013. And then again, in there was one more big one, right, that extended out into 2017 and into the early part of 2018. And look at this fourth little one they did on the end, this little tiny one. This is the most recent one, Chinese credit impulse, where they've injected money into their economy. They get huge problems in their economy, and this is why the central banks are getting to the point, especially the Chinese central bank and the European central bank are getting to the point now where they're getting low on tools or ammunition without destroying their currencies, the value of their currencies. This is where they're at. They can't go into big, and this is why they did this little tiny hump on the end, this little fourth one. And that's why it's tiny. Is because they knew if they go into a big credit impulse, that's going to affect the valuations of the yuan, their currency. Currencies around the world right now are in a race to the bottom. This is what they're in, a race to the bottom. Investors are just starting to realize this. Let's take a look. We want to read one more thing before we go and we check the gold and silver price today. That a lot of Chinese bonds now are going to come to maturity. What are they going to do? They're running out of firepower, and 200. It says here that a record 2 trillion yuan, or 283 U.S. billion dollars of these bonds. It's a record. It's 58% more than last year's level. It means fresh debt to refinance upcoming maturities will start hitting the market soon, with the southern province of Guangdong expected to sell notes as early as November. So it's going to start in Guangdong. And this, look, the yields are shooting heavenwards on Chinese government debt. This is just the beginning. You know, let's take a look now at the gold price today. And we can see that the investors are starting to catch on. But just the first ones, early ones. There's going to be a flood, an avalanche coming. We're going to see movements into the gold and silver market that are similar to the movements we've seen into the bond market. And it's going to reflect on prices. It's already just in the early cusp, early starting stages right now. Gold and silver have not really, the boat has not left the port yet, really. And even though we see these prices moving up a little bit into the 1500s again on gold, 1506 today. Let's take a look at silver today and see what it's doing. Silver's at 1804 and moving up. It's up 21 cents on the day. It's looking good. So gold and silver are catching the bid, but that's not all. You know, cryptocurrency is going to be affected by exactly the same thing that's going to affect gold and silver. And why these investors are moving into gold and silver is they're also going to move into cryptocurrencies. And so if we move to cryptocurrencies today, we see cryptocurrency has been catching a bid lately. And it's went up, the prices went up, and it's holding its gains right now. It's at $248.3 billion, 67.7% Bitcoin dominance today. If we take a look, we can see all the coins, most all of them are moving up a little bit, with the exception of Bitcoin Cash. Bitcoin Cash kind of going along level. But we see Bitcoin at $93.41. We're looking at Ethereum at $184. We're looking at XRP still at 29 cents. Bitcoin Cash $287, and Litecoin at $59.28. So now let's take a look at the stock market today and see what it's doing. Now you have to understand something about the stock market. Even though it's overvalued and over-leveraged and everything else, you know, if we start moving directly into hyperinflation or toward hyperinflation, the stock market can catch a bid from all this too, but it's priced in overinflated dollars. We're looking at 115 points up today. And the more the banks open up the floodgates of money, the more stimulus that they inject into the economy, the more of that money is going to make it into the stock market as malinvestment, basically. You know, and the more they inject, it's like a perpetuating cycle. They've crossed over the line now. The central banks of the earth have lost control over the system. And they only have one thing left that they can do. Inject more and more liquidity into the system in a never-ending, like a liquidity trap. Just making the rich richer and the poor poorer. But this is all leading someplace. It's leading toward hyperinflation. That's where it's leading. Let's take a look now at crude oil. $54.24 for sweet light crude, and the price is dropping. There's an inventory build in the United States. You know what's caused the United States to become the major oil producer of the world is, again, malinvestment. They've invested a tremendous amount of money in shale oil. And, you know, with limited return. I mean, it's got a bad ROI, return of investment, very, very poor for shale oil, because it's very expensive oil. They have to put in a shale oil well, and basically what they're doing is steaming the last oil off of the rocks down in these old wells and these old well sites, where at one time, when they first came in, like to West Texas, you know, and they dig for oil, and they put a pipe down into the ground, the oil would explode up into the air, and it'd get everybody wet. They'd all be drenched in oil. You know, the oil would be shooting up into the air 1,000 feet into the air, and then they'd have to cap it. It'd be a hard job for them to cap it. They'd cap it off, and there'd be a lot of pressure there. And so it wasn't nothing for them to get the oil out of the ground. They didn't need to steam and high pressure and all that kind of stuff. Well, they sucked all that oil out, and they took the pressure away, and in fact, they drained the hole of oil, and then they capped it. For years, them oil wells stayed capped. Then they went back in with shale oil technology, and they were able to go down in there and basically loosen that oil up with high pressure and steam and stuff like that, and get what was left down in those. Basically, they're just cleaning up what's left. So then it doesn't take long for a shale oil well to run out again. It's the original wells they put in, they'd pump for years and years and years and years with lots and lots of pressure, because there's lots of oil down there. And it was like the wells they have over in Saudi Arabia. But shale oil is something where they have to just constantly keep going back in, and it only pumps out for a year or two, and then they have to go back in and re-steam it and do everything else they have to do to get the more oil out of it. And so it's a losing proposition, basically, is what I'm trying to say. Honestly, they have to just keep chasing after it, and it costs money to chase after it, and now they're starting to run out of the money, the free and cheap, easy money to chase after it. So we're seeing an over inventory of oil, and we're seeing oil prices drop, but this is limited. In the future, we're going to see oil prices explode, but we're looking out a few years, you know, into the future. U.S. Treasuries. Right now, we're looking at the yields dropping substantially today, and they're dropping fast. 7 basis points on the long end of the yield curve. Substantial drops in the yields today. Got to keep our eye on this. Of course, you know, we've got strange stuff going on in the market. It's due to the stress created by all of this over leverage of the system. Let's take a look now at I didn't get the dollar index on there. Yeah. Anyway, the dollar's probably going along around 97 today. It hasn't been doing anything lately. It's been just going along sideways. Listen, thank you guys for listening to this show. Give me a thumbs up, and we'll catch you guys again tomorrow morning. And anyway, bye-bye, guys.